Good morning, everyone. Paul Duncan here. This is Tuesday, February 8th, before the market open. Quick overview of what I'm looking at today. Overall, the market, short term, I think we're going to be choppy, slight bias to the upside, which I would consider bullish. Medium term, we have really poor breadth via multiple measures. I consider that bearish for the medium term. Longer term, we're still downtrending on the cumulative tick. We're trying to push up, but it's not working yet. So we're still in a longer term downtrend. On the ES, via the ESH 22 March contract, it's relatively stable. It's unchanged in its overnight levels. There is a slight, very slight bias upward. The VIX is elevated relative to where we were, where we closed on Monday. And the SPX, still relative negative regime overall. I would expect because of that, we're going to see a little more violent moves, maybe like what we saw into the close yesterday. 4,600 remains an upper short-term target. The flip level is at 45.13 plus or minus, and a lower target, which is very, very possible, is the 4,400 level. The next expiry does have more gamma expiring, which is good. It could possibly provide fuel to the upside. The cumulative tick chart that you see here, circle 1 is the 52-week new high, new low, and you can see red over green consistently. We're still in that negative low breadth regime. Circle 2 is the filtered cumulative tick, and you can see not very strong participation either way. We had some selling into the euro close and around that time frame, then we had some buying into the afternoon, which stabilized, but that is not a strong signal. Circle 3 is what I was referring to as a longer term indicator that we use. Long-term downtrend. All the moving averages that you see there are trending down for the cumulative tick. And then circle 4, the only saving grace here is that we are putting in higher lows, as you can see at circle 4, that was Friday. Monday's action is shown there at a higher, even though with the sell-off. On the ES and the VIX, relatively stable across the board. Overnight VIX is elevated. We did see some of what we call the true gamma zero and the true delta zero. They did edge up just slightly, not a lot. Overall, the ES has fallen through one of the zeros, the upper one there, the 44.75 level. I would watch very carefully here to see if we lose the lower one, which is the 44.52 level. So pay attention to that. That 44.52 level could be very interesting here. In terms of the SPX PM settled and the AM and PM settled, PM is on the left, the combo is on the right. You can see that we're right in this regime, right where we're bounded by that 45.10 JPM long put, and 45.50 on the upside is where I think is a realistic area for us to play within. On the downside, the 4,400, as I indicated, was where I think short term we could be playing. And you can see that is within the expected move for today. We do have decreased volatility relative to yesterday. This is the wider of the volatility measures that we use. So still, because we're in the negative regime, still I'm looking to see a little bit broader and sharper moves. Overall on the combo, very, very broad. I will note that call open interest is at 4,700. Which is also where the maximum gamma exposure is for the overall complex. On the downside, 4,400 again remains that common theme to the downside and a short-term target. When we look at the PM settled expiry, we have a negative gamma condition expiry. This is pretty important because this is probably where we're going to be heading still into tomorrow's expiry. The 45.50, as you see here, is the major call. Major GEX expiry, and that when we remove upper calls there, that actually can open the path up forward. There's little liquidity up at that area to stall on, and so we actually might see, once this is cleared out, might see some move higher. The range between 4,500 and 45.40, this blue box area, suggests that we could just whip around in this area. You can see there's a couple transitions back and forth in that area, and those are nice hiding places for the market to hide in on an overnight session. And then that 4450 is a major expiry below. If we don't move up, and removing of some liquidity down below actually opens up the path to go south. The SPX combo complex looks relatively unchanged from where it was yesterday. Overall negative gamma condition, fairly strong negative gamma condition. It's going to take us several days or a major rally to get us out of this. Call open interest sitting up here at 4,700 alongside the maximum gamma exposure, positive gamma exposure. Excuse me. Long-term flip is at 45.13, which is right around here at this circle 4 area. We also have some negative gamma. This is the JPM hedge that is rearing its head here, and will provide an area here that we're going to have to pay attention to. On the downside, the 4,400 level remains where it is. So I hope you found this useful. Go ahead and give a look into www.gammaedge.co or .us, and we will certainly help you guide through the day and be able to navigate some of what we're seeing here. Thanks again.